for example, Trump was thinking of or saying that he was gonna eliminate the employment tax.
Yep.
Because it doesn't make sense. Like, you're hiring someone, and so they're paying their taxes, but on top of like you paying them, let's say $1,000 a month, you pay an additional like 6 or 7 something percent.
Yep. How's it going, everyone? Welcome back to another episode of Driven. In today's episode, we're gonna be discussing our experience with taxes in business.
Yeah. And for those that don't know us, my name is Juan, and this is my brother Alexis. And in 2019, we started a business together that currently does a run rate of roughly $3 million a year. So I feel like up to that point, we kind of know what we're talking about.
Yeah. Like my brother mentioned, I know we started this business in 2019. Right now, we are at a run rate of $3 million. So we also had our fair share experience with taxes. I know before this business, we also had another business that didn't do so well. Mm-hmm. We decided not to continue it. Yeah. We also paid taxes there. So we experienced a lot of taxes, especially the revenue that we're doing. We have to pay a good amount of taxes overall.
Quite a bit.
Yeah. So I guess one of the questions I had is that I know everyone has to pay taxes across the board. Yeah. That's something in the U.S. If you live here, you have to pay taxes. If you don't, then you go to prison and you get fined.
Yeah. And then even if you move, let's say, to another country that doesn't have taxes, like let's say the UAE, which is like a lot of people move to Dubai, Abu Dhabi. Like, even if you don't pay taxes there, I know you're supposed to pay taxes if you have income in the US. So you had to fully resign or resignate your American citizenship.
Damn.
And that's a lot. But even then, like, if you move to a country that doesn't pay taxes or doesn't have taxes, income taxes, you still have to pay the US.
Yeah. And because that's one of the things, you will have to pay your taxes. Because I know there's some people saying loopholes that if you file as a certain entity or you file as a certain thing, you don't have to pay taxes because you're away from the US. But I feel like those are gurus trying to sell you something, trying to sell you a course or...
Yeah, because I do think, like, for the bigger companies, like corporations like Apple, like, they probably do a lot of stuff that, we're not even aware of, that we don't have an understanding of, that they do in order to pay less to no taxes.
That's kind of a conspiracy. Well, not a conspiracy, but that's very, like, theory out there because I'm like, well, it kind of makes sense for them to work with the government for them to pay less taxes because, well, what is the government going to say? I mean, they could say something. They could set them as an example, but all that lost revenue and taxes, that's a lot. Like in Apple, Microsoft.
But the thing is, like, how much taxes do they actually pay?
I think it depends on the state. If they have branch offices on the state, they're gonna have to pay sales tax or whatever. Yeah,
sales tax. But then the consumer.
That's true.
Pays sales tax.
That's true. Never mind. Corporate taxes, federal taxes.
I mean that's so much, like, so ahead of us that or lack of or away from our understanding that we could just speculate.
Yeah. But going back to the topic, I know that everyone's going to have to pay taxes if you live in the U.S., if you do business in the U.S., if you have a job in the U.S. And I know our experience with taxes as an employee is a lot different than paying taxes as people who have businesses. So I guess just to sum it all up, I know if you're an employee, the majority of the time you're going to get paid a W-2, which I know you fill out a W form. So you're an employee, you work at a job, and then they automatically take the taxes away from you. If you're working at a job and then towards the end of the day you do your taxes, either the government's going to have to owe you or you're going to have to pay a little bit more.
Yep.
Depending on how much they withdrew from your paycheck. The other one is 1099, which is an independent contractor. Pretty much you work as a entity yourself. You work with the company. They pay you the full amount, which is like, let's just say $1,000. The government doesn't automatically take it away from you. You have to pay at the end of the year when you do your taxes. And then not only do you have to pay your own taxes, but you have to pay the taxes that the employer would pay if you were a regular employee.
Yeah.
So that's the second one. So that's a little bit different. That's you yourself as an individual. But now going into the business, what was the difference, I guess, for you?
Yeah. And so at the beginning, going into like business, I would think that the company, I think even before that there's so many different ways that companies are taxed. There's so many different structures. There's so many different like things that companies are classified as do to pay different taxes. And so I think it makes sense only to go into what we know. And when we say business, like a business, we're only talking about us and our experience and how we go about our taxes. And so going in, like, we didn't know much about like taxes for, you know, small business. And that's something that where was I going with this?
Well, I guess before that, disclaimer that we're not tax experts.
Yeah.
We're just sharing our experience. So if you have any tax questions, go with your accountant.
Yeah, so we could be completely like, so, you know, really good accountants do our taxes.
Yep.
So we have really no understanding. We just give them information. We just give them like, you know, this. These are P&L from or these are, you know, QuickBooks. They I think they have a connection, whatnot. Yep. So they're able to see everything, and they do our taxes. So we're just gonna speak up from what we know.
Yep.
But what was your question?
What was the difference between, because I know, like I mentioned, as an employee or as an independent person, you're either going to work with a company, automatically you're going to get your taxes taken away. So like if you get paid $1,000 a month, and this is just to make it simple, you get paid $1,000 a month as an employee, automatically the government takes like $400 away. So your gross check, pretty much at the end, you're going to have $600 instead of that $1,000. As a 1099 independent contractor, you get paid $1,000. You get paid that up front. Now with the taxes, you're gonna have to pay $1,000 plus extra money, which for me doesn't make sense. It doesn't make sense.
It doesn't. But that's why you've heard some of the laws that, or some of the, like, for example, Trump was thinking of or saying that he was gonna eliminate the employment tax.
Yep.
Because it doesn't make sense. Like, you're hiring someone, and so they're paying their taxes, but on top of, like, you paying them, let's say $1,000 a month, you pay an additional like 6 or 7 something percent.
Yep.
So it's kind of like, it doesn't make sense. So you're gonna pay taxes for hiring someone, giving them money, and having them pay taxes. You're gonna have to pay taxes on top of that.
Yep.
Doesn't make no sense.
Doesn't make sense.
But it is what it is. Like, I mean, we do live in the best country in the world. So, I mean, can we complain? Maybe that's what they're relying on. That we can't complain because, or we can, but I mean, it is the best.
Yep.
But yeah, so the difference, it's similar to. Well, I think it's similar. So you already described the two, W-2 employee and self-employed. As a tax, how we're taxed, we're an LLC taxed as an S corp, and so pretty much it's the same. Like any income that the company receives, it's, you know, straight up income, and then from that, what, you know, we remove every business expense. We pretty much deduct expenses, and ultimately, like, let's say the profit is there. And so that's the profit. And so at, you know, whenever we do file our taxes, which I know a lot of the times it's like, and that's another thing for us. I think our due date is March 15 as opposed to April for the rest of the
for the population. General population,
W-2 employees.
Yeah.
So that's another difference, that our due dates are less or quicker or sooner than the W-2s. And so that's, you know, another difference. But the other difference is that, you know, as a company, I would have thought that it was the company that pays the taxes. But really, like, if we do have any profit, let's say it's $100,000, us as 50-50, you know, it flows down to our personal individual income. So let's say the profit, the business had a profit of 100,000, 50,000 of income is shown on your personal, and 50,000 of income is shown to my personal. And pretty much it depends, you know, on our tax bracket. Like, for example, we have partners that are, you know, generating income, you know, whatever, like, income bracket you're in, you know, that's what you pay in taxes, and vice versa. And so that's one of the things that I didn't understand until, like, not too long ago, that the business doesn't pay the taxes. Pretty much that income, that profit is, you know, I think distributed like, or through a K1, and it's shown as income from, you know, from a business, and you know, we pay our individual taxes from that, which is very different than I thought it would be.
Yeah, it's very different. And I guess just to summarize how the whole process of, you know, when you get the money from a customer or a service or a product or software, royalties, whatever, I know that's your total income. And I know right away the government doesn't tax you on it. But I know as a business, you have certain expenses that is required for you to continue operating your business or for you to grow your business. So that's where I think that's where you hear the term of, oh, it's a business expense. Yeah. It's because that's something that's required for you to operate the business. So like if you make $100,000 in your business in sales, $100,000, you have $40, $50, $60,000 of expenses. So that's $100,000 minus $60,000 of business expenses. So your profit would be 40,000.
Mm-hmm.
So 100,000 minus 60,000, that's 40,000. And then that's where you say that at least how we're structured.
Mm-hmm. So let's say in that situation, 40,000, 20,000 of income would be shown on your personal.
Yep.
And 20,000 of income would be shown on my personal.
Yep.
Yeah.
Yep. So that's how it works on how we're structured, how our company is structured. Yeah. And damn, where was I going with this? I forgot.
That's a good question.
And one of the things I was gonna mention is that at least for businesses, that's one thing that most businesses get wrong, or most people that have an entity they get wrong, is that they feel like anything is a business expense. But under the eyes of the IRS, for something to be considered a business expense, it has to be ordinary, meaning it has to be something you usually do for your business, and it has to be necessary.
Mm-hmm.
Even though it falls within the ordinary things of your business, why is it necessary? Mm-hmm. Why do you think it's a business expense? Mm-hmm. So that's what is considered a business expense, which I think a lot of people get wrong, like business gurus. I've seen some people where they want to deduct their Bugatti, their Lamborghini. Yeah. I'm like, jeez.
So you've seen a lot of videos on Instagram or TikTok where they say like, oh, my tax accountant called and they say that I need to buy a car in order to deduct it from my business.
Yep.
That is really, from my understanding, you can on your taxes, but you're not supposed to do that.
No. Yeah. And with the cars, it's a little bit different because I know they use I forgot what is it called, but
it's where it's over 6,000 pounds and you're able to deduct 100% of it.
Exactly. That one. I don't know what it's called, but it's that one. Mm-hmm. But I know there's certain limits because once you go into the luxury ones, the IRS is going to tell you no, regardless if it's 6,000 pounds. So those people that buy AMGs, the G-Wagons, the freaking Lamborghini Urus, once you get audited, it's like, fuck, you're fucked.
Yeah.
And so that's what I mean by ordinary and necessary. Yeah. And so that I think a lot of people are putting out to flex or to sell a course or whatever, they're putting that information. And that's one of the things that we learned, or at least I learned along the way, is it has to be ordinary and necessary.
Yeah, because pretty much, we've had some misunderstandings of what is a business expense and what isn't, but I think through time, like, you definitely got a good grasp of it, like you got a good grasp of it, and so so one of the things that, like, what are some things, like, I know that that's how we're structured, but I know as a business, right? But I know there's different structures, and I know there's several things that also affect the way you get taxed, like, for example, where you live in. Yep. Like how we said, like, if you have other sources of income, or you have like let's say we have partners that also generate income, I know that also affects it. So what are some, pretty much, I just named a few, what are some things that affect the way that, or your taxes, affect your taxes, if that makes any sense?
Yeah. So your business entity structure, because if you're a regular LLC taxed as a partnership, you're going to pay a little bit more taxes just because of the structure, versus LLC taxed as an S corp. And then you start getting into the bigger ones, which I don't think it makes sense to talk about, but your entity structure, how you're structured. So that's one. Also, where you live, because and that's across the board for anyone, whether you're an employee, whether you're a business, depending on where you live is going to dictate how much you get taxed. So there's federal tax that you have to pay federal tax across the board for just to be part of the United States. And then also your state tax. So we happen to live in California, one of the freaking most taxed cities or states in the U.S. And
in Los Angeles,
in Los Angeles.
So adding the U.S., California, and the local, which is Los Angeles.
So federal across the board, everyone has to pay. And I know the next thing is the state. So we happen to be in California. I forgot how much we pay. I don't want to butcher it, but we do pay quite a bit. Yeah,
and then just really quick, I know that there was a couple of years that we've paid more to California than to the federal.
Yep. And we just happen to be there. Versus if we happen to be in a state, because some states they don't charge you income tax. So if we were like in a Nevada, a Tennessee, South Dakota,
Texas,
Florida, Texas, if we were in those states, we wouldn't pay any zero income tax. So that's the one. And then we also get paid tax by city, locally, by county, city and locally. Because you notice, no? That I think there was an appraiser in our old previous warehouse. They sold the building. So an appraiser came in and pretty much, okay, this is your business. Even though you don't own this property, you're going to pay taxes on the property. You're also going to pay taxes on what you own, on the machinery, on everything. So that's a freaking tax that we just found out about because the county of Los Angeles just wanted to do that. Where even though like we own a piece of machinery, we bought it out, you had to pay for it. Tables, you had to pay for it. You bought a computer, you had to pay taxes on it. So it's kind of like we're renting out to Los Angeles.
Yeah, and it's kind of, well, I don't know. Doesn't make, I mean, I get it for generating income from their point of view, but it's like, it doesn't make any sense. Like you already own it, and like you already own your computer. You already own your, like, for example, our cutting machine, and you have to pay taxes on it.
Yep.
Doesn't make sense.
Yeah. So that's one of the taxes that we found out, like, just randomly. It's like the appraiser came and now they're giving us a bill every year.
Yeah.
But once we leave California.
Yeah.
Which is one of the reasons why we're leaving California. So that's one. Another one is your sales tax, which, like you mentioned, I think it comes from the consumer. Mm-hmm. So those are some of the ways the different ways we get taxed.
Yeah. And then, so I know that, everyone gets taxed, but the thing is that no one wants to get taxed. And so what are some ways that we've done that in order to minimize the tax burden that we have? Like, what are some things? What are some deductions? What are some of the things that we've done?
As a business, it's just your business expenses. Us, instead of trying to be as profitable as possible, one of our things that we're doing is we're pushing for growth. So obviously we have to invest. So either in people and more machines and everything that we need for the business, boxes, shipping supplies. Once the inventory sells, which is the cost of goods as our sales increase, so everything increases. So we're investing more instead of trying to be profitable. That's one way we're decreasing our taxes, is just by growing the business. Mm-hmm. So that's one. The other one, I know once we start, once the distribution goes to us, the profit, I know that there's certain tax cuts that we could do, or tax incentives that we could do. I know if you buy an electric car, that's on your personal end. Yeah. That's one. Usually, like, I think it's 7,500 tax credit. Yeah. Another one that we've done is we bought solar panels. Yep. Which is a tax credit, which I think you're only allowed to do like
30% of the total solar or cost of the equipment. So, for example, if let's just say it costed $100,000 for the equipment, you get a tax credit of $30,000, meaning that if you owe $30,000, you have a tax credit of $30,000. So it pretty much negates. Yep. So that's a pretty good one. Yep. That's a pretty big one that we're going to see the effects of it when we do our taxes for that year.
Yep. So that's one. If you're single, one way is to get married and have your wife not work. Yep. That way you can reduce your tax. Yep. Have kids. Yeah. That's another one. And I know there's like more incentives here and there. I know, like, if you want to donate, if you want to give to charity, if you want to volunteer, there's a lot of tax incentives that you could take personally for you to lower your overall, like, bill of taxes.
Yeah. So, yeah, that's a lot of ways. And then I know, like how you mentioned, moving.
Yeah, that's one.
Moving. I think moving is one of the reasons why, like, I know we spent, or we're going to spend, or we have paid a lot of taxes to California that in another state, we wouldn't have that. And so we paid, $50,000 in taxes to California. And I think that's pretty considerable. Yep. I think, go ahead.
Yeah, and I was going to say, I don't think we would have minded if California was managing those taxes correctly. Because you heard that, I think a year ago or 2 years ago, that they had a X amount of money allocated to helping the homeless cause, but they can't find it. They don't know where it went to.
Yes, it's kind of like where's that going? Like, if it was a place like a really, like, let's say utopian place, like I know a lot of people mentioned, like Sweden, Norway, Denmark, where, let's say there was free healthcare, the streets were clean, there was no homeless, there was, like, let's just say almost a utopia. If it was run like that,
we wouldn't mind.
Yeah, I'm like, okay, fair enough. They're using the taxes right. Yeah, fair enough.
So that's one. You see the homeless, you see the streets. They don't want to take care of that. Freaking bumps and messes up your tires and your suspension and whatnot. Yeah. So that's one. Another one, what they're teaching in the education system. The curriculum, I don't agree with it, especially now, and that's getting very political and whatnot. But I don't agree with that. And then that's one of the things that I believe in, is that I don't think institutions or certain organizations are necessarily bad. It's the people that get into the position of power that become corruptible, that just fuck everything up.
Yep.
You know, they pay themselves more. They hire family members and they pay them a fucking huge salary. They buy properties, and then use that because they're in power. No one's gonna, you know, challenge them for that. So there's a lot of reasons why I just don't agree, or I don't see it makes sense for us to pay that much in taxes for it to be mismanaged. If it was different, where everything was good, then, you know, so be it.
Yeah, and I know that really just comes from like our experience and looking at it through our own eyes, because there's probably things that we don't see. There's probably things that we don't understand, but pretty much from our experience, everything has been, you know, coming from our point of view, and also at the same time trying to see it from their point of view. Yeah. Which, you know, at times is very hard, because it's like they make a lot of decisions that are like is someone there kind of thing.
Yeah.
Is someone there? But a lot of it has come from like, you know, our understanding, our experience, and what we see.
Yep.
But yeah, I mean, so, you know, those are some ways to reduce the taxes, you know, on a personal end, you know, marriage, kids, a house, I think.
Well, how there you go. That's one. Yep.
Buying a house, you know, the renewable energy things, which I know is like 30% credit off the solar panel system that you purchase. What are some other ones? Yeah. I had a meeting with Erica. But yeah, you know, there's a lot. And then from the business, just taking deductions on business expenses, you know, ordinary and necessary.
Yep.
But yeah, I mean, that's pretty much our experience paying taxes from a small business owner point of view.
Yep.
Do you have anything else on it?
No, I think that's it.
Yeah. Well, with that being said, this has been another episode of Driven. My name is Juan.
My name is Alexis.
And we'll see you on the next one.